The market continues to plod forward into a typical fall market. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, October 3rd. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is affecting your options as a home seller or buyer. This week, there are 42 homes on the market, a few less than last week, with the average asking price about the same at $1,858,000, $8,000 higher than last week's. 7 homes went pending, one less than last week, but the average asking price of those pending homes jumped up significantly to $1,719,000, up from the $1,454,000 we had last week. And 10 homes closed this week, 4 more than we had last week. Unfortunately, that closing price dropped significantly to $1,634,000, down from the $1,854,000 we had last week. So now that we know how the market performed this past week, we can look at the broader trends that help us track where the market might be heading. Before we do that, if you do find this information helpful, you can hit the subscribe button down below. That way you don't miss out on future updates. And while you're doing that, why not share this with a friend? Everyone deserves to be in the know about their local real estate market. Okay, let's take a look at those broader indicators. After stalling out in the mid-40s for the past couple of weeks, inventory started to drop again. We're now down to 42 homes on the market, which is right in line with what we would call a normal or neutral inventory level. With inventory continuing to move back down to more normal levels, I expect the turnover levels to return to normal as well. As it stands, right now the turnover rate is still sitting at 64%, just a little bit above that 50% mark. The low turnover rate, despite the following inventory levels, indicates that the dropping inventory has more to do with sellers pulling their houses off the market as it does with homes actually going pending. The over-under number moved further into the under range this week. We had been slowly working our way back to breaking even on this asking price, but this week set us back a little. Been slowly creeping up over the past few weeks. Homes are still closing close to their asking price, with less than a 1% difference on the average between the asking and closing price, but that is mostly due to healthy movement in the lower price range. To further demonstrate that point, the average sales price dropped $50,000 this week from last. That significant drop right there. This continues to reinforce the point that homes in the sub 1.7 million range are performing well. At the same time, anything getting close to 2 million or higher in value struggles to get traction unless it is nearly a perfect property. I still think we'll see the average sales price settle in the range of about 1.8 by the end of the year, and right now we're sitting just a little above that right now. The Triple Q Fund had another strong week of growth, improving by 2%. This week was a bit of a rebound from the flatter week that the fund had last week, where it kind of leveled off and ended without any growth. This fund and the greater Silicon Valley economy continues to perform well amidst an otherwise volatile economic year, which has played a large part in maintaining our home values here in San Ramon. Interest rates continued to reverse course this week as well, although this chart doesn't show it because we're looking at such a broad range here. The past 2 weeks have put a damper on that positive energy we had been seeing, with the average creeping down since July pretty consistently. These rates will continue to put relentless pressure on our market from both ends, both de-incentivizing homeowners from selling and abandoning their lower mortgage rates, and from buyers looking to get into the market but who are unable to afford the higher costs of borrowing money. The market continued to plod into a typical fall market this week. The hope I had a few weeks ago that we would have an uncharacteristically busy fall market has faded significantly. Homes are still selling, and while the turnover rate is more anemic than I'd like to see, the market is performing rather normally for this time of year. The interest rates continue to be most significant headwinds stopping a more dynamic market from occurring, and it is not looking like those will come down anytime soon. I think we need to settle in and prepare for another long and slow winter market. Thanks for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button down below so you can stay up to date on the future and how the market continues to perform as we head into winter. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend, and we'll see you next week with a new update.